If you're watching this, chances are you have visited Prague in the past, walked through its beautiful streets and bought a coffee or a beer while watching boats drift by on the river. Now, what if I were to tell you that without you even noticing, there was one man who stole money from you on that trip and made your experience much less enjoyable than it could have otherwise been? And actually, he stole money from you not just once, but during each transaction you made, be it with your credit card or in cash. Well, there might be more than meets the eye. Let's dive in. The reason you most likely lost some money whilst visiting Prague is the Czech currency itself, the koruna. And before you jump to any conclusions, no, we're not talking pickpockets here. Besides, Czechia consistently ranks amongst the safest countries in the world, so if you are careful enough, you should be fine. What we are talking about instead is the money you lost the second you made any sort of a financial transaction with the koruna. Let me explain. Czechia, together with all of its neighbors, has been part of the European Union since 2004. Since 1995, all new EU member states, including Czechia of course, have had an obligation to adopt the euro as soon as they meet a handful of requirements. Put differently, without agreeing to adopt the single currency, the euro, they would not have been allowed to join the EU at all. The requirements they need to fulfill first set out a number of economic steps that they need to be taken before an EU member switches from its national currency to the euro. And by the way, the only existing EU member state which has negotiated an exception to this rule, in Brussels speak an opt-out, has been Denmark. All the rest of the member states do have to join the euro eventually. Here comes the problem though. What the requirements do not specify is any sort of target date by which a new EU member state must join the eurozone. As a result, it is ultimately a decision of the country's political representation as to how fast, and ultimately whether at all, to join the eurozone. Sweden, for example, held a referendum on euro adoption in 2003, with 56% of the population rejecting the euro. This does not remove the obligation to join the eurozone eventually from Swedish governments, as EU law takes precedence over national decisions. But let's say the Swedes are not in a hurry to join either. This brings us back to Czechia. Even before officially joining the EU, all the way back in September 2003, the Czechs were quite optimistic about adopting the euro. The government declared that realistically, Czechia would begin to use the single currency somewhere between 2009 and 2010. This would have put it toe-to-toe with Slovakia, which aimed successfully to join the eurozone in 2009. Due to its historically strong ties with Slovakia, Czech governments initially wanted to join on a similar date to keep the connection between the two countries strong, or possibly make it even stronger. But then, in 2009, the eurozone debt crisis hit. Now, this is by no means supposed to be an economic analysis. Let's just say, and this is very simplified of course, that Greece, together with a number of other countries, had indulged in excessive government spending, which they financed with borrowed money. As interest rates rose, Greece was unable to repay its debt, and other Eurozone countries had to step in and bail Greece out. At one point, the Eurozone was even likely at the risk of collapsing entirely, just because of how massive the accumulated debts were. Now, even in Czechia, newspaper headlines were filled with mentions of the Greek debt crisis. A narrative appeared that Czechs should not join the Eurozone because doing so would mean that they would have to pay for Greek debts. As a result, public approval of the euro in Czechia began to fall down dramatically. In May 2009, 61% of the Czech population was in favor of adopting the euro. In September of the same year, with the debt crisis in full swing, this figure fell to 48%, and it has stayed very low ever since. So while the Czechs are quite unlikely to leave the EU, 63% would vote to remain according to the latest polls, their support for the euro remains very lukewarm, to say the least. This brings us back to the man who steals your money during your visit to Prague, former Czech President Vaclav Klaus. It is very likely that he has been one of the main reasons why the Czech view of the euro and the EU as a whole worsened so much. Klaus has been a prominent critic of any sort of deepening of European integration. He famously hesitated to sign the Lisbon Treaty for almost a year, which made Czechia the last country to formally ratify it. When the Czech Constitutional Court dismissed complaints brought against the treaty in 2009 and practically forced Klaus to ratify it, he labeled it a loss of Czech sovereignty. So how exactly has Klaus been the cause of Czechia refusing to join the euro? Well, it is true that in the Czech political system, the president only has largely ceremonial powers, at least on paper. However, it is also true that Czech presidents historically enjoy great respect and play a prominent role in political debates, certainly more so than in countries like Germany, where the president is largely sidelined in favor of the chancellor. Some would even say that Czech presidents enjoy a much bigger space in the media than would be consistent with their role as enshrined in the constitution. As a result, Klaus and his strongly Eurosceptic rhetoric made its way to the everyday lives of the Czech population. He regularly criticized the EU in the largest national media, for instance claiming that joining the EU had not helped former communist countries like Czechia, labeled the Czech decision to join fatal and a loss of sovereignty. And when the EU was awarded the Nobel Peace Prize in 2012, he said that it was a joke. And at the height of the debt crisis, he also volunteered himself to destroy the Eurozone should it be needed of him, claiming that he already had experience with burying the currency of former Czechoslovakia upon its breakup and would gladly do so again with the euro. Throughout his entire tenure as president, he also refused to hoist the EU flag at the Prague castle, claiming that Czechia is not a province of Brussels. Such strong statements from a figure of authority naturally become fodder for the media, leading us to the core principles of the political agenda setting theory from political science. This theory basically claims that by choosing which messages to highlight, the media can and do shape public attention and perceptions. In the context of Klaus's Euroscepticism, his consistent anti-EU messages became focal points in the media. They were splashed across headlines, discussed in talk shows, and debated in households. This constant media coverage of Klaus's sentiments not only reinforced his views, but also positioned them as a significant topic of public discourse. This created a vicious circle. As Klaus continued to criticize the EU, the media continued to report on his negative views of the EU because, of course, they did. He was the president and he was much respected in Czechia. This very likely made the population more afraid and, in turn, influenced other politicians and public figures, making them more hesitant than ever about supporting Euro adoption or generally any further EU integration. Why? Well, because they feared the potential backlash. Quite simply, they feared not getting elected again. Naturally, we're not saying that the EU cannot be criticized. There is a different problem. The vicious circle that Klaus created means that no real debate on Eurozone or EU integration benefits exists in Czechia. From time to time, representatives of big businesses declare that Czechia would indeed benefit from having the euro given its enormous dependence on Germany, Czechia's largest trading partner. Overall, more than 60% of all Czech exports end up in the Eurozone anyway, so the claim is that its monetary policy is not really independent at all. Economists who oppose the euro, on the other hand, praise the supposedly independent monetary policy of the country, and the general public fears that adopting the euro would make goods more expensive, which is a well-debunked myth. That's it. No real debate takes place, just claims. So what does this mean, this Czech insistence on a national currency, to you, the visitor? Well, mainly a lack of transparency, especially if you do come to visit Czechia from a country that does already use the euro. Naturally, prices are much more difficult to compare for you. That creates space for all sorts of outright scams, where shady exchange offices in the center of Prague offer to sell you euros for exorbitant fees. But even legitimate banks do give you slightly worse exchange rates on every Czech koruna you spend. The result? Well, the dinner you have in Czechia will become all the more expensive than it would be in euros. And that is how, figuratively, Klaus and his opposition to the euro is stealing your money. The bigger problem, however, is that politicians are unwilling to honestly debate the benefits and drawbacks of the euro. Even Andrej Babiš, former prime minister and currently the leader of the opposition and one of the wealthiest Czechs, is not willing to dispel the public's fears of the euro because he's mainly interested in winning votes, even if it means fanning fears in society. That is all the more surprising when you consider that he is also the owner of Agrofert, a large company which does a large part of its business in euros. So personally, Babiš and his company could and probably would profit if Czechia adopted it. But populism wins over rational arguments, and that even applies, unfortunately, to the current government, led by Vaclav Klaus's former party, the ODS, which is still led by a strongly Eurosceptic wing and staunchly opposes any steps that would bring Czechia closer to a potential euro adoption or any further EU integration. Ultimately, whether Czechia fulfills one of its EU accession obligations, that is, to adopt the euro, remains to be seen. What also remains to be seen is who wins the upcoming Slovak election, which we will closely follow over the coming weeks. If you want to know more about the race, don't forget to check out our recent video on Robert Fico, one of the biggest contenders for an election win. Also, don't forget to subscribe so that you don't miss any of our upcoming coverage of the election. This has been Jan with Prague Pulse. Thank you so much for being here. Until next time.